Good morning friends, welcome to the pre-market advisory checkup. First we'll start with the global market commentary. Let's see that last night Dow Jones ended up again 59 points. It's almost closing to the 17,000 mark which we saw kind of a month ago. This is the third consecutive day US markets have closed in the green. In spite of the Israel and the Palestinians kind of conflict have begun since past last night, we've seen the markets have kind of hold up. Coming back to the Asian markets, Nikkei is kind of up by 118 points and Hang Seng is down by 180 points. So it's kind of a mixed bag. Also, our Singapore Nifty, which is kind of trading in the Singapore exchange, is up 5 points. So it's kind of a flattish tone again out there. Yesterday what we saw is 100 points down on the Sensex. On the FIR figures, again they were buyers to the tune of 251 crores yesterday. Those are the provisional figures. And on the other side, DIIs were the sellers at 481 crores. So friends, we're seeing again, in spite of all the odds, FIRs continue to remain buyers in the Indian equity market. So that's again gives a kind of a boost that kind of the hopes is still there and the market has a lot of steam left. Friends, this is all from the global kind of market checkup, and now I'll give it to Sadhana for the derivatives. Thanks.
Good morning friends, let's have a view on derivatives. Yesterday Nifty started the session on a flattish to negative note, but we have seen that markets continue to trade in a narrow range of approximately 15 to 20 points but with negative bias. Many of the stocks like ONGC, Tata Motors, IDFC, which were down by approximately 1 to 3% each. And Nifty finally snapped its session with a marginal loss of 0.024% at 7890. In this period, we have seen that marginal long positions were squared up by market players as around 31,500 contracts were reduced in open interest and Nifty futures spread decreased by approximately 20 rupees. On the other hand, cost of carry increased by 43% from 6.24% to 8.92% and Nifty futures premium increased marginally from 12 points to 15 odd levels. On the options front, PCR is decreased by 3% from 1.06 to 1.03. Marginal, we have seen that marginal additions were seen in put option as compared to call option. Yesterday, good positions were added in call option. That way, PCR is decreased from 1.06 to 1.03. India VIX was down by 1.80% from 13.91 to 13.66. In options activity, we have seen that 7,900, 8,000, 8,100 call option has added good number of shares in open interest. As of now, 8,000 stands with highest number of shares in open interest. In put option, we have seen that 7,800 has reduced its shares in open interest and that activity was shifted to 7,900. From past 3 days, we have seen that 7,900 is continuously active, most active put option. There is one security in bank today which is Unitech and FIs for net buys of 434 odd crores in future and option segment in yesterday's trade. They were net buyers of 277 crore in DEX futures, they were net sellers of 43 crore in DEX options, they were net buyers of 180 crore in stock futures and they were net buyers of 21 crore in stock options. A 5-day CWAP stands at 7820, lower range for the market would be 7,750. As we have seen that 7,700 also has added good number of shares in open interest, so this would act as a strong support going forward. And higher range would be 8,022. Singapore Nifty is flat up by 3.5 points at 7886.50. So we may see marginal flattish to positive start in Nifty futures today. That's it from derivatives. Thank you.
Hello friends, welcome back. Let's start with the actionable ideas and we'll go to the watch list and news and updates. For the first actionable ideas, we'll start with the sale. Metal industries, now the Chinese manufacturing gauge PMI that came in at 50.3 versus the estimates of 51.5. Now this again a bad news for the metal sector as well because the Chinese as an economy is suffering kind of a biggest slowdown in the past few years and it also kind of CCA hikes the royalty rates on 23 minerals. So that is definitely a big kind of a dampener for the metals pack. From those we would short sale with a stop loss of 88 and target 82 on the downside. Next is Indraprasth Gas. It's a long idea. Government asked state-run gas utility GAIL to cut the national gas supplies to kind of the non-priority sectors such as steel, which would kind of definitely dampen their production, but instead give it to the full CNG compressor, that is requirements of retailers like Indraprasth Gas. Now, on the kind of the priority line, it was like the Indraprasth Gas was below the steel sector. Now it will be shifted from from below to the upside. So that will definitely benefit Indraprasth Gas. So we long Indraprasth Gas with a stop loss of 360 and target 378 and 385 on the upside. Next is Z Entertainment. The stock will soon replace, come into the 50 index, part of the 50 share benchmark Nifty index, after it replaces United Spirits. So which was the first move in the index earlier this year in the March. So this kind of changes would imply that we would see kind of some buying happening in Z Entertainment as those index funds, they increase their weightage on a particular stock that has been added. Same likewise, United Spirits would see some kind of selling pressure. On that action, long Z Entertainment, stop loss 282 and target 297 and 302 on the upside. Watch list for today, what we have is stocks with positive buys. We have LIC Housing, we have Arvind, and we have Biocon for the kind of stock with positive buys for intraday. On the negative bias, we just have one stock, that is Indiabulls Real Estate. These are the news and updates. CCEA hikes royalty rates on 23 minerals. Now the unit cabinet has kind of decided to hike the royalty rates of 23 minerals. Now experts see this as a move to broker peace and to get the GST on board as soon as possible. Dr. Reddy's has come under the scanner of the US Department again for their Consumer Safety Act involving child resistant packaging regulations. Now this is kind of a first of a lot where Dr. Reddy has kind of gone a little bit outside involving the safety practices and going the packaging side. Oil Ministry is considering kind of Reliance to kind of stop selling KGDC crude oil to its Jamnagar refinery, and instead it's kind of focusing to sell it to the Chennai Petroleum Corporation at a lower rates. Now this is definitely kind of bad news for Reliance. PSC, that is a production sharing contract, mandate producers to sell crude oil at the best available markets. Now again, this is not happening. It's offered, a CPCL offered a price formula that was about $4 to $5 per barrel, less than the formula quoted by the Reliance. Now Reliance is quoting almost 8.5, 8.4. But if they have to give it to the Chennai Petroleum Corporation, they have to give it to anywhere between 4 to 5 kind of dollar per barrel. So that is again a bigger negative for the Reliance. TVS Motors launched an upgraded variant of its popular scooter, that is the new Scooty Zest. This is again one of the major entrant in that kind of segment where the competition is kind of less compared to others. It's priced at 42,300 ex-showroom Delhi. They are kind of expanding its product portfolio, which would definitely are showing in their sales figure as well. When it came out in this kind of first of this month, the TVS Motors were the only kind of the two-wheeler company which posted strong kind of month-on-month sales figure. We continue to remain positive on TVS Motors. Thank you, friends. That's all we have from the kind of pre-market advisory desk update. Have a good trading session.